The Chinese government has just launched a new public blockchain infrastructure platform led by the Conflux Network. The platform, dubbed Ultra Large Scale Blockchain Infrastructure Platform for the Belt and Road Initiative, aims to offer an underlying public blockchain for cross-border applications, according to an April 1st post by the Conflux Network. The main focus of the project is to create a public blockchain infrastructure platform that will be able to support the implementation of cross-border cooperation projects along the Belt and Road Initiative. What did we just see in late 2023? The first ever cross-border digital gold trade using the digital yuan. So when people talk about the SWIFT and the dollar and the bond market, they are just macro trends. People at the very end hang on too long. And this is going to create, I believe, a religious experience for these people who believe that this can't happen, that the West can never. Look at all the stuff that the West has done that you look and say to yourself, I never in my life thought I would see anything like this in this country. And yet it's all around us. Everywhere we look, socially, morally, economically, religiously, politically, geopolitically, everywhere we look.
Today, we're diving into a game-changing development in global trade. Did you know that 75% of the world's population and over 50% of global GDP are now part of China's Belt and Road Initiative? And now, China has launched a groundbreaking public blockchain infrastructure led by the Conflux Network for cross-border applications. This move, coupled with the first ever cross-border digital gold trade using the digital yuan, aims to bypass the US dollar entirely. As countries trade in local currencies and accumulate gold, the dominance of the dollar is being chipped away. This isn't just a macro trend, it's a tectonic shift in global finance.
In order for a new system to work, it will have to be transparent. It will have to be fairly priced. It'll have to be more of a cash and carry market. So when they were deciding how do we design the COMEX, if they made it a cash and carry market, the price of gold and silver would be much, much higher, and the price of the dollar would be much, much lower, just supply-demand fundamentals. Instead, they decided to make it highly leveraged, where multiple claims on a contract, and you don't even have to pay for it. You can make believe to pay for it by having money in your margin account. And so this created an environment of tremendous leverage and rehypothecation. If it's a cash and carry market, largely like the Shanghai Exchange is, they do have a futures component, but it is largely cash and carry. Then the supply-demand fundamentals come into place. You know, I guess it kind of bothers me that there are a lot of people out there that I think are probably even smarter than me, that I respect a lot, that dismiss entirely the concept of the BRICS. Everyone focuses too much on the common settlement currency. That is a mistake. It will happen when the time is right. Look, 36 more countries have formally applied. You're talking 46 countries potentially. They probably won't all make it, but north of 40, maybe 50. Who knows how many countries are admitted in October? You're talking the majority of human population, larger swath of global GDP already, most of the rare earth commodities, most of the precious metals, they control everything you need, more of it than the West does, and not to mention bigger military might by far, 2 of the 3 largest nuclear arsenals, all of that stuff. People focus too much on the common currency because what they have been doing. And this is why there's such a rush for gold, because I believe they need the gold to transact business now cross borders. So I'm going to give you a few examples. But what they've been doing is trading in local currencies. Like example, Brazil, the second largest exporter of corn in the world, is now selling corn and soybeans to China for yuan, and probably taking that yuan and converting it into gold on the Shanghai Gold Exchange for immediate cash and carry. They get kilo bars of gold sent to them. So you don't need, so with all of these countries using their own currency for settlement, or the deal that Iran struck with China to modernize their biggest airport, they're paying for it in oil. They're not paying for it in dollars. So all of these deals that are being set with local currencies chips away at the settlement value of the dollar. And everyone's come back, well, the bond market is the most liquid and deep, and this bull crap already with the bond market. The bond market's a bunch of nonsense. And I'm going to read some stuff to you about that. But how's it done over the last year and a half? with the bond market. And do you know that there's a deal right now going on? Well, let me get to the bond market in a moment, because it's a big part of everyone's pushback against the BRICS. Oh, the bond market, the bond market, the bond market. Part of the reason they they say that is the Petro deal. The proceeds of all the money that was paid in dollars for oil, the excess goes into the bonds. Well, who's been selling the bonds? Oh, yeah, that's right. That's those countries. And what have they been doing with it? Well, they've been buying more gold than at any time ever. And so as they shed bonds, they're buying gold, which has not only massively outperformed the bond market over the last decade, massively, but has no counterparty liability like sanction and confiscation risk, no default risk. As Doug Casey has always said, it is an asset that is not simultaneously someone else's liability. They are replacing bond holdings with gold holdings. They are replacing dollar settlement with local currency settlement. In essence, it is a new currency without it being a new currency. Every other country in the world just about has remonetized gold already. It is remonetizing. It is taking on a different viewpoint. But when we talk about the bond market, which has been just a joke recently, as we know, I want to read to you something that is deplorable. And, not enough people are talking about this, but here it is right here. Okay. The International Swaps and Derivatives Association, ISDA, is writing to the Board of Governors of the Federal Reserve System and the FDIC, the Federal Deposit Insurance Corporation, and the Office of the Comptroller of the Currency, to urge the agencies to implement targeted reforms to the supplementary leverage ratio, the SLR, and enhanced supplementary leverage ratio framework. Blah, blah, blah. It says it calls for the exclusion of on-balance sheet U.S. treasuries. In other words, what they're trying to do is say, you can load up on as many treasuries as you want. It's not going to be included in the leverage ratio. Well, how did that work over the last couple of years with the banks who loaded up on treasuries and then interest rates went up and it put banks out of business and has a whole bunch more teetering, or the insurance companies teetering with these toxic bonds? And so basically what they are saying is the reform is seen as crucial to preserve the resilience of the U.S. Treasury markets, the U.S. economy, and the international financial system at large. The bond market's a bunch of crap, and it's hanging on by a thread. And the rest of the people in the world see it for what it is. It is a tool of suppression. It is a tool of the ability of the West to run sanctions and to confiscate. As Janet Yellen said in Brazil, we need to confiscate this money and use it to fund the Ukrainian war effort. So, look, as far as I'm concerned, the rest of the world says, why the hell would we ever buy these bonds when this is happening? When they can, not only when they can take our money and freeze it and sanction it, but it's performed horribly. It has all of these risks, including, default risk. None of that applies to gold, and the rest of the world is accepting gold and accumulating gold, which is what? Oh, yeah, the only other tier one asset. And they've lost control of the pricing, so much so that China and their market is willing to pay a 10% premium for any silver that the West is stupid enough to give away. And one other thing, when we talk about the ability to trade with one another, a lot of stuff happens and no one is hearing about it. The Chinese Belt Road and Rail Initiative, the largest infrastructure project in human history, 75% of human population, north of 50% of global GDP already. How many people have heard this? Probably no one. Here we go. The Chinese government has just launched a new public blockchain infrastructure platform led by the Confluence Network. The platform, dubbed Ultra Large Scale Blockchain Infrastructure Platform for the Belt and Road Initiative, aims to offer an underlying public blockchain for cross-border applications, according to an April 1st post by the Confluence Network. The main focus of the project is to create a public blockchain infrastructure platform that will be able to support the implementation of cross-border cooperation projects along the Belt and Road Initiative. What did we just see in late 2023? The first ever cross-border digital gold trade using the digital yuan. So when people talk about the SWIFT and the dollar and the bond market, they are just macro trends. People at the very end hang on too long. And this is going to create, I believe, a religious experience for these people who believe that this can't happen, that the West can never Look at all the stuff that the West has done that you look and say to yourself, I never in my life thought I would see anything like this in this country. And yet it's all around us. Everywhere we look, socially, morally, economically, religiously, politically, geopolitically, everywhere we look. And then look at the ridiculous behavior around the world we have, weaponizing the dollar and behaving the way that we do in a very hypocritical manner, according to the rest of the world. But yet this can never happen. It's such a mistake to believe this can never happen, focusing on the bond market, the bond market. The bond market's a joke, and these people know it. They know it. And if you ask me, there's a damn good chance that the bonds are rehypothecated just like the gold is too. And this is the rallying cry. And so these countries don't need a common settlement currency right now today that everyone focuses on to disrupt the apple cart. No, you trade with one another in local currencies and you accumulate as much gold as you can. And you are then destroying little by little by little by little the settlement status of the dollar and little by little by little by little the reserve status of the dollar when you exchange treasuries for gold. And I'll tell you what, it's happening. And this goes right back into what I was saying about why it's different this time. The world does not want our bonds and our dollars, not so much because of its performance or lackluster performance, but more so because we have proven to the world that if we do not align ideologically with you, you're in trouble. That was the death knell of the dollar. And that's why I keep coming back to the fact, is it too stupid to be stupid? It's planned.
Thanks for tuning in to today's deep dive into global finance. Let's quickly recap the key points. China's Belt and Road Initiative now includes 75% of the world's population and over 50% of global GDP, marking the largest infrastructure project in human history. China has also launched a public blockchain infrastructure led by the Conflux Network, enabling cross-border digital gold trade using the digital yuan, effectively bypassing the US dollar. Additionally, countries are increasingly trading in local currencies and accumulating gold, undermining the dollar's settlement and reserve status. These developments signal a major shift in global economic power dynamics. If you found this video insightful, please give it a thumbs up, share it with your friends, and subscribe to our channel for more in-depth financial analysis. We'd love to hear your thoughts. So drop your comments below.